Can you profit from weekend theta decay? Have you ever wondered if you can actually make money from weekend theta decay in options trading? It's a fascinating topic that many traders are curious about. Let's break it down. Theta decay is the term used to describe how an option loses value as time goes by. This loss is especially noticeable in the extrinsic value of options. What's interesting is that this decay happens continuously, even during weekends and holidays when the markets are closed. So, how does weekend theta decay work? Options lose time value every calendar day, not just on trading days. This means that theta decay continues over the weekend. However, since the markets are closed, you won't see any price changes during that time. Instead, market makers and professional traders anticipate the two non-trading days and adjust option prices on Fridays. By the time the market closes on Friday, the expected decay for the weekend is already factored into the options price. When the market reopens on Monday, the option price reflects the decay that occurred over the weekend, assuming no other market changes took place. This means that if you think you can buy an option on Friday and profit from the decay over the weekend, you might be disappointed. The market has already accounted for that decay in the pricing. Now, let's talk about the implications for traders. Weekend theta decay is priced in ahead of time, so simply holding an option over the weekend won't give you an edge. However, theta decay is most significant for at-the-money options and accelerates as expiration approaches. Options that are close to expiration will lose value faster, including over weekends, but again, this is already priced in before the weekend. Option sellers, or those who write options, can actually benefit from theta decay. As time passes, the value of the option decreases, making it cheaper to buy back or allowing it to expire worthless. This effect applies over weekends too, but sellers need to remember that the decay is already priced in before the weekend. So, can you profit specifically from weekend theta decay? In practical terms, it's quite challenging. The market anticipates and prices this decay into options before the weekend. Traders who try to exploit weekend decay by holding options through the weekend do not gain an unexpected advantage since the decay is already reflected in Friday's closing prices. However, there are ways to incorporate this knowledge into your trading strategies. One approach is to sell options into the weekend. Since theta decay continues over the weekend and is already priced in, option sellers might find that holding short positions through the weekend allows them to capture the time decay effectively, assuming the underlying price stays stable. Another strategy is to adjust or close positions on Fridays to manage risk associated with the weekend's non-trading period. Additionally, considering longer expiration options can be beneficial. Since theta decay accelerates near expiration, understanding how weekends add to the total calendar days can help in timing your trades, especially for weekly options. In summary, weekend theta decay is a real factor that affects option prices as part of the continuous erosion of time value. However, because the market prices in this decay before the weekend, profiting directly from it is not feasible. Instead, traders can use this knowledge to optimize their timing and strategies, especially if they are option sellers who benefit from time decay. Understanding that theta decay applies over all calendar days, including weekends, helps in planning trades and managing option positions effectively.